Hey, welcome in, everybody. Today we're going to talk about Venezuela oil and what the weekend's events actually means for the oil markets. We're not going to get political. Politics comes into play, so we're going to talk a little bit about that, but we're not really going to talk about the politics of it, but more what it means for the fundamentals in the marketplace. So here's what I got. I got a little presentation for you. So here's a little bit about Venezuela and the capture of Maduro, what that means. So let's start with a little bit of history. So Venezuela, dating all the way back to 1929, was a dominant oil producer because they have some of the largest reserves in the world. So when you look at the dynamics between Venezuela and the United States, there is very much an interconnected dynamic between the oil production, between the oil supply, the oil demand. So that shift has been shifting over the past couple decades. So in 1997, this has a percentage, but it's kind of small on the screen, so I'll just read it off. But 1997, this was our peak imports from Venezuela. It was about 1.4 million barrels a day, which was roughly 4.4 or 44%, not 4.4, 44% of Venezuela's production, and it represented 12% of US imports. So that was in 1997. Then fast forward 20 years, lots of things happen. Hugo Chavez, we're going to talk a little bit about that history. A little bit, like I said, we're going to touch on the politics, but this isn't a political one. This is more about the fundamentals. So in 1997, the U.S. was importing 44% of the Venezuelan production, and it represented 12% of U.S. production. We're going to skip over the 2019 to 2021 sanctions. In 2024, Venezuelan crude imported into the U.S. was about 222,000 barrels a day, which represented 22% of Venezuelan production, but only 3.5 of U.S. imports. And the latest 2025 estimate is 172,000 barrels a day. That was in late 2025, represented 17% of Venezuelan production and 2.5% of U.S. So Venezuela's oil trade with the U.S. in numerical perspective, historical was over a million and represented around 50% of their output and represented 3 to 4% of US imports. So, what about the crude imports, the US, and a historical overview? So, from the 1970s, the US production declined, steadily declined. US was actually a very strong producer, but then we hit a lot of declines on conventional oil, and it led to a sharp rise in imports because we were still utilizing a lot of crude oil. By 2005, imports peaked at 10 million barrels a day, fulfilling 60% of US consumption. Then between 2006 and 2014, the shale revolution launched, and that's when we had high productivity, and we figured out between two technologies, hydraulic fracturing and horizontal drilling, how to extract oil cheaper and more effectively and at higher rates of production. So what that meant is, as a structural importer, we became less dependent. But there's a twist coming up. So from 2015 to present, imports stabilized at 6.2 to 6.8 million barrels a day in 2023 to 2025. But remember that number, 6.2, 6.8, because we're going to have a twist to that. So what about the import quality? This is something that a lot of people skip over. So, because the United States imports and exports crude oil, that sounds a little odd. However, our refineries are built on heavy sour crude. That's what they're built to refine. And it is very expensive and takes a lot of time to tune refineries into different types of crude. It can be done, but it takes a lot of money and a lot of time. But currently, our share of imports, heavy sour, is 55 to 65%, and that is less than 25 degrees API. On medium sour, that is 20 to 25. This is a 25 to 35. So these are heavier. So for reference, a 40-degree barrel is what WTI is and what Brent is, roughly. So light sweet, which is closer to that 40-degree barrel, it only represents 10 to 20%. So why does the U.S. import heavy crude? Well, our Gulf Coast refineries have invested billions in advanced processing units for cokers, hydrocrackers, desulfurization units, and these favor heavier crude types such as Venezuelan, Canadian, and Mexican Maya. So those are the primary. Now, currently, Canada represents probably 60% of our imports. Mexico is supplying some, Saudi Arabia, Colombia, Brazil, and Venezuela, which is only representing, I think, 3% right now. Now, the U.S. exports a fair amount, and I'll get into the numbers here in just a second. But on light sweet, it's roughly 75 to 85%. Medium, 10 to 20. Roughly most of our exports are the lighter sweet crude, predominantly because we refine on a whole a lot of that heavier sour crude. So what does this mean? When we look at imports and exports, we are currently importing 6.5 million barrels a day, but we're exporting 4.2 million barrels a day. And for those that want to stay on top of the markets, I'm Brian with Energy Rogue. We have a product called Rogue Radar. It's $99 a month, and you get access to this, which is Rogue Radar, which gives you access to 2 PDF reports every single week, video, and this quick view of the market that is updated every single night. And right here you can conveniently look at crude imports, crude exports, what their current is, what it was last week, last year, and a 3-year average. So if you follow crude oil markets or any of the refined product markets, Rogue Radar is a very cost-effective way to follow those markets. So anyway, we import 6.5 million barrels a day, but we export 4.2 million barrels a day. And that really has to do with quality. So when we're talking about Venezuelan crude is that heavy sour crude. Now, we export a lot of our light sweet because we simply, our refineries run better on the heavy sour. Not to say they can't run on the light, but the product mix, the economics, and everything is much better for the heavy sour. So let's step through history and take a look at this. Early Venezuelan oil dominance. In the 1920s, they discovered oil, or actually was discovered in multiple places in Pennsylvania, here in the United States. In 1929, Venezuela becomes the second largest producer. And in the 1930s, U.S. companies controlled 98% of the market. And in 1960, Venezuela co-founds OPEC. A lot of people forget that. So in 1976, there was PDVSA, which is the National Oil Company, and a lot of foreign collaboration was happening. Citgo was acquired in the 1980s. The U.S. remains the largest buyer for decades for Venezuela. Then in 1999, Hugo Chavez takes office and pursues an anti-US policy. And then in 2007, forces out Exxon, Conoco, and demands PDVSA a majority ownership. So this is where Chevron actually accepted a barter exchange, and that's why they continue to operate there. But Exxon and Conoco walked away from the table. So they walked away from assets and they left them to Venezuela. So Chevron was the only one that stayed, but this basically drew political conflict between Venezuela and the United States, more from an economic and corporate sense. So then Maduro's descent. In 2013, Maduro assumes presidency after Chavez's death. 2014, oil prices collapse, economy enters a free fall. 2018, inflation hits 130,000%. Think about that for a second. 130,000%. So something that costs $1 today is worth or needs $130,000 the next day. This basically had a very, very strong underpinning, and is part of the reason Maduro was not really a nice guy. A lot of people are happy that he's out of power. The key question is what happens next, and we're going to talk about that. So in 2019, U.S. Imposes an oil embargo, and then economic catastrophe. 130,000% on peak inflation. Then a GDP collapse of 75%. 7.7 million people became refugees and fled the country. And then there's over a 50% poverty rate. And this is part of the reason that the economy and the state of Venezuela is in a dire straits. So the authoritarian grip, democratic institutions were dismantled, international isolation, they isolated from others, and foreign support from China, Russia, Iran, and Cuba provided loans and backing. So the narco dictator, this is something the Trump administration has leaned into as far as calling it a narco terrorist, using that as narcotics. And in 2020, the U.S. did have an indictment and charged Maduro with narco terrorism and accused running Cartel of the Suns and collusion with Colombian guerrillas, and a $15 million bounty was placed. So let's take a look and let's get back off the politics, back to like I said, we're not going to talk about the weighing of the merits of the politics. We're really going to talk about oil. So when we look at oil production in the 1990s, there was 3 million barrels a day of Venezuelan production, and then it just continued to erode down. And that's where we're currently. Let's actually take a look at it on the supply side. This is inside of Rogue Edge. So we have two products, Rogue Radar and Rogue Edge. Rogue Radar gives you this nightly summary with technicals, fundamentals, and everything you want to see in one page. And then for those that want to dive in a little bit deeper, we have Rogue Edge. It costs a little bit more, but here we can actually go back and take a look at, where is it? Venezuela. Nope, Saudi, Russia, UAE, Venezuela. Okay. So back in 2018, Venezuela was producing 1.4 million barrels a day. Obviously, the sanctions hit really hard and dropped all the way down to 340,000 barrels a day, which probably just fueled their internal economy, really. And then it started growing, and it grew from the economic backing from China, Russia, Cuba, and Iran, and was able to grow. A lot of those exports started getting pointed to China, really. So, but the oil production has collapsed when it used to be in the 1990s over 3 million barrels a day. So let's keep going. U.S. Oil companies in Venezuela, Chevron, we've already talked about that. They're still there. Exxon and Conoco, they actually were ousted and walked away from the table. Citgo. Citgo is the geopolitical pawn. So in 1980s, PDVSA bought one of the key U.S. refining networks, and in 2019, an opposition-led board gains control, and legal battles are still going on around Citgo. Infrastructure in ruins. So what's happened to the Venezuelan oil infrastructure is decaying refineries, idled rigs, and what we call a brain drain. A lot of the oil engineers have fled the country. Or let's put it this way: a petroleum engineer in the United States might make $100,000 to $200,000 a year. In Venezuela, it's $5 a month. I think I heard that number from Peter Zayan, a geopolitical analyst. Really good to listen to. But that means that your best and brightest are fleeing if they have an option. So in January 2026, the U.S. military strikes Venezuela, and what happened? Maduro is captured. U.S. launches precision strikes. Maduro is apprehended. Trump, we are going to run the country. So what does that mean? A lot of Venezuelans are celebrating this because it is the end of a dictatorship that is not really helping the general economy. 50% poverty level. A lot of things need to be fixed. Now, there's a lot of questions. What's going to happen from here? That's really Maduro exiting is not going to solve all the problems. There's going to be a lot of problems. We're going to talk about the oil predominantly, but there is going to be 5 critical implications here. A political transition, which is currently being discussed, an oil revival, humanitarian crisis, international law, and U.S. geopolitics. The political transition. There's hope versus chaos. The optimistic view, democracy restored after dictatorship, free elections organized. And Maria Machado praises liberation, and exiles return to rebuild. So that's an optimistic view. Now, obviously, predicting the future, you don't really know. There is a pessimistic view. There's no clear successor government. The military could splinter, insurgency risk. Defense minister calls for resistance. An Iraq-type quagmire is feared. Because if you look back at US's history, there has been challenges in rebuilding governments after a leader has been transitioned out. So international backlash. There is some international backlash from Spain and here in the United States, there's a lot of criticism. And it's not so much about Maduro, because I think it's commonly held belief that that he's a bad guy and he's not representing the interests of the Venezuelan citizens. He's representing the interests of Maduro. Removing him is not going to solve all their problems. So what about the oil industry? So there's 303 billion barrels. It's the world's largest proven oil reserves. And the U.S. companies are ready to spend $10 billion. But the timeline to really reclaim a top producer or actually come back, 10 years, and I think that's rather aggressive. It is going to take a long time to revitalize that industry. So long story short, next 12 months, I don't see much growth or much decline. And you can see that in the traded markets today. We actually opened up after the weekend, after the U.S. captured Maduro. A lot of people are like, is it going to rise or is it going to drop? It was basically flat to Friday. So the oil traders know that this is going to take a long time. So what is the oil revival reality check? The infrastructure is devastated. There's massive investment required. There's technical challenges and a historical precedent. Iraq, Libya, a forced regime change rarely stabilizes supply quickly. So Trump's vision is that the U.S. companies will help repair a lot of the oil infrastructure. And like I said, that is a long cycle. and the humanitarian outlook. Hopefully the Venezuelan people will be taken care of as part of this, because we're talking about the oil and the economics, but there's a very big human element to this. So the current conditions, a 50% poverty rate, 190% inflation, that's today. But as we talked about before, 130,000% back in 2018. And there's been a 20% exodus of the population since 2014. International law, there's a lot of questions there. Like I said, we're not really going to cover that. Global reactions. Okay, Russia. Russia deems this a flagrant violation. Iran, an armed aggression. Spain will not recognize intervention. China is concerned about investments and loans. And the EU is relieved that Maduro is gone, but the legal concerns remain. So the U.S. policy, is it a strategic win? It reasserts U.S. influence, foreign policy victory, maybe. Justice served. A lot of these are question marks. Now the U.S. policy impact is going to be a quagmire risk. I'm not going to cover this because we could be here all day when it gets to this. I'm going to skip over this. Okay. And there we go. This is going to be Venezuela at a crossroads. Is it a success story or a cautionary tale? Will democracy flourish or chaos begin? So the key question that the market has to play in is, what does this mean for the Venezuelan production? And if we look, since May 2021 to today, there's been an increase in production, and a lot of this is from an influx of capital from China, from Russia, from Iran on loans, and Cuba, and it grew from 500,000 barrels a day to 900,000 barrels a day. But there's a lot of productive capacity, but there's a lot of investment that is needed. And if you want to stay on top of the markets, come join us, Rogue Radar. We have these come out every single Monday. We actually talk about the market in our Rogue Radar report, which comes out, gives you selective charts. And then we have our Rogue Radar that comes out later in the week after a lot of the reports have come out on natural gas, and we talk about the market, but we also have a convenient red light, green light system, which tells you factors about stocks, production, refinery inputs. If you are going a little bit deeper on oil markets, on natural gas markets, on refined product markets, Rogue Radar is a very cost-effective way to do it. So when we're looking at Venezuela and what that means, I go back to, let's go back to the beginning. Here we go. And a lot of it sits right here. What does that do for U.S. imports? Well, today, in the next 12 months, it's probably not going to do much. After that, we're probably going to start importing a lot of Venezuelan crude, which ironically, a lot of the U.S. refineries were built upon. So listen, my name is Brian, Energy Rogue. If you've recently subscribed, thank you. Really appreciate you watching, and stay on top of things. We stay on top of things on oil markets, on natural gas markets, refined product markets, natural gas liquid markets, and electricity. So if you have any topic suggestions or anything like that, drop them in the comments below. But I wanted to get this out there with all of the dynamics that are happening out there in Venezuela, around the news around Venezuela, Maduro, and the United States. So listen, thanks so much for joining, and I will see you Wednesday. We're going to do one on natural gas. Talk soon.